Good morning, everybody. Welcome to the Flow Show. It's Fed Day, the biggest day since the last biggest day we've ever had. Morning, lads. How you doing?
It's Fed Up Day. Hello, good morning.
Fed Up Day. I like that one.
Morning, guys. It's Fat Day.
Oh, they're all on the ball this morning, folks.
We're a bunch of fun, aren't we?
Yeah. Fun feathers. Oh, so here we are. Probably a lot of hand sitting today because it doesn't happen until this evening for a lot of us. So not sure whether you got some grass to cut or grass to watch grow, perhaps, or fences to paint, but you might be worth doing something. But you can also do your homework, get your charts ready, get your levels ready for tonight, because we need to be planning for that. Let's get through. Yeah, Brian, you can get some naps in. You'll have a cat nap. Let's get through the headlines, and then we can put together perhaps our final thoughts for this show ahead of the Fed later. It's all been changed at the PBOC. They've changed their central banker now. That was on the cards for a while. The new guy, Pan, is in as the new central bank governor. We'll have to see what he's going to do with things, but the term independence isn't something that is big in China regarding the difference between the government and the PBOC and the central bank. So he's probably going to do whatever he's told to do at the outset. They did fix the CNH lower again, 7 point, or USD CNY lower at 7.1295. Tongue tied this morning. 7.1295, lower than expected, 7.1345. And again below where the market has been trading as well. So we're back hovering around the 715s, but not too much change there for now. The trend lower continues in the meantime. Over to Japan, and some data out over there. Corporate Services Price Index, so a PPI number there, year on year, coming in a touch softer than expected, 1.2%, and lower than the prior 1.7%, but still a positive number, still prices rising over there. The Japanese government kept its overall view on the economy unchanged, saying it was recovering moderately, but it did raise its view on business sentiment for the first time in 7 months, saying it is picking up. This is a report where they use different language phrases to indicate whether things are good, bad, ugly, or improving, that sort of thing. So first change in 7 months for business sentiment, which is a good positive for those guys. Now, there was a government official out citing Ueda comments he made, and so the comments I'm going to read are basically from Ueda himself. It's saying that market sentiment continues to improve. Japan's long-term yield rate remains stable under YCC. The yen rate against the dollar is slightly volatile, partly due to interest rate differentials. Not sure partly due. When you've got one on 5.5% and one on minus 0.1%, but there you go. It also said that the BOJ will maintain a accommodative monetary environment for firms. So another hint that they're not going to go changing things in a rush, so to speak. Now, there has been a bit further jockeying in yen pairs this morning. No real news that I've seen. Kay mentioned this morning there's been some banks warning, last-minute warnings against a possible change. There's another bank who was out this morning, Standard Bank, saying that the carry trade is at risk from a potential YCC change and the central bank coming out of easing. So I think, unless there's any other news I've missed, this is probably just a bit more of last minute taking money off the table, squaring up or repositioning into the event, particularly the Fed first, and then obviously the Bank of Japan later. So I won't be surprised if we see some moves happening here or there that just come out of nowhere, just on that squaring up. Anything to pick out of that Japanese stuff, Kay?
The thing is, what I found quite funny is that one or two of the banks said that we misunderstood UEDA. That keeping an accommodative stance doesn't mean that they are not going to change anything. So, and then I don't know if you saw, but the IMF also came out with their periodically report and saying that they advised the Bank of Japan to start let the YCC go, that they can remain accommodative, but without the YCC. So, as you say, there's been a bit of especially since yesterday, position adjustments. When those banks come out with comments, you always have like at least a number of followers that are going to trade or get a bit nervous, and we've actually seen over the past couple of days the MEX yen, for instance, starting to come off. I mean, I think it's so far a normal procedure. You always, because for every Bank of Japan meeting now, there's going to be this chance where they move things, right? But yeah, I wouldn't yet read too much behind it. We know the yen is volatile. We know that on Friday it is going to be volatile, regardless whatever they decide, whatever they say. The market is going to dissect every word in the statement. Every word UEDA may say afterwards, if he comments afterwards, because there is a press conference as well, so it's going to be in two legs. But yeah, so far I would say normal stuff ahead of the Bank of Japan, ahead of a central bank, which we can't dismiss the fact that despite what all other central banks are doing, that this is a central bank which so far hasn't changed anything apart from Kuroda's 25 BPs widening of the YCC. Hasn't changed anything since Ueda came on board, which is 4 or so months ago. So yeah, it's wide open, right? I do expect that after the combination of the three central banks that we see now, it are the three, take away the PBOC in there by weight, but it are the three major G7 central banks, and I would expect that we are going to find dollar yen at a different level come Friday evening, or other yen pairs, you know.
Yeah, no, I agree with that. It should be remembered that the last move by the BOJ, that yield curve move, wasn't monetary policy, by the way, as they said.
Yeah, okay, well, yeah.
Whatever.
What is monetary policy then, right?
Yeah, exactly.
Well, I guess we will talk about the Bank of Japan more in length on Thursday, for instance, but tomorrow, that is. But yeah, it is open. Every meeting is live now with them. But I do think, yeah, I mean, it's perhaps not an overstatement saying that there's a possibility that dollar yen trades 137 or 145 comes Friday, right?
Yeah, no, exactly. You've got to set some wide boundaries for this one, I think.
Oh yeah.
And actually, that's something I popped in our newsroom for those of us in those of you in the chat room. Just something I saw, a video I saw last night, an options guy talking about expected price moves. You know, how you can sort of judge where to have place a trade, or where you want to start taking profit, that sort of thing. So I put a note of the way I sort of look at that type of thing in the newsroom. So if you're in the chat room, check that one out. As for the IMF, you won't find me talking about them often, the international monetary falls, because they're forecasted as bad as the rest of the banks. They were a big part of what happened in the UK markets back in September, with their scathing attack of Truss's policies that were well over the top and never came to fruition, and the UK didn't disappear up its own butthole like they were forecasting. So I treat those guys with a lot of disdain, and you won't find me mentioning them much unless there's been a big market move over something they say. A bunch of clowns. Anyway, moving on before I start really ranting. Over to Australia, and some CPI data took a bit of wind out of the Aussie sales, coming in softer. Now these guys have moved to a monthly CPI reading as well, but this is all Q2 numbers, so take that as you will. CPI year on year was down to 6% from 7%, so a big shift lower. Was expected to come in at 6.2%. Then you got these various, a bit like Canada, all these various measures trying to guess 100 ways to try and guess inflation, also coming in softer as well. So what that's done is it's wiped out again a load of expectations for the RBA. Gold is now see them peaking at 4.6% versus 4.85% prior. NAB now see no hike in August. They were expecting a hike previously. So those expectations all coming down a bit, as I say, helping to take some of the wind out the sails of the Aussie this morning, and we'll look at that in a bit. Over to the UK, I think we spoke about this yesterday, the CPI numbers coming out. Not one I get to talk about a lot because it's usually coming out in the middle of the show, but it was a bit of an improvement. This is an industrial number, industrial trends, came in at -9 versus -18 expected, so improvement. But what was positive was a Q3 number for business optimism, which came in at 6 versus -2 prior. So that gave the quid a little shot in the arm yesterday morning. Maybe a bit of improving sentiment in the industrial sector for the UK. A Reuters poll on the BOE now see the bank expected to raise rates 25 pips to 5.25 in its meeting next week, August the 3rd, just before NFP. That's according to 42 of 20 economists, but there's still 20 who still see a 50 pip rise coming. They also see a peak of 5.75 by year end. So now we're well below the 6%, 6.5% that a few were expecting not a few weeks ago. So as you can see, those expectations come right down as well. Philly Fed data, which is never on the calendars. I still don't know why it's on the calendars, but that came in yesterday from the US. So it's the services number, non-manufacturing. That had a little improvement. It was up 1.4 versus -16.6 in June. New orders weren't as bad, -13.3 versus -16.2 prior. Employment had a decent jump. It went up 11.9 versus -14.3 last month. And also the wages and benefit cost index had a big jump as well, 39.8 from 22.2 prior. So service sector there in Philly showing a bit of an improvement, but good jobs and some inflationary numbers there as well. Also out was house price data, and no real red flags coming in there. The F.A.C.E number year on year was 2.8%, beating expectations, down on last month. The S&P, the S&P Case-Shiller numbers for the 20 city year on year number coming in at -1.7% worse than expected. These numbers have been a bit negative now for a while, with two different measures, one still showing plus numbers, one showing negative numbers, but overall no real flags there. And Belgium business confidence K, oof, it's in the ditch, mate, -14.8. What are you going to do, you guys? What's happening over there?
Yeah, I think next month for the one for July should be a bit better, because I was in Belgium, so
yeah, so should see a boost to retail sales and whatnot. Definitely, but yeah, so moving on from that, then we got the big US consumer confidence number, which was another decent read, 117, well above expectations, and following up the big jump we saw the month before. Current conditions came in hot as well, 160 versus 155.3 previous. Expectations also on the up, 88.3 versus 79.3 prior. And good news for the Fed, inflation expectations dropped to 5.7%, down a pip from 5.8% previously. So that number, again, indicating soft landings. The consumers not fearing anything coming up to disrail their plans or anything like that. So that's going to be something that's going to be considered by the Fed as to, you know, whether they can keep hiking, because they're not seeing any real crunch on the consumer just yet. Although, as we've been mentioned on this show last week, there are some signals that there are problems. Lending, people getting turned down for loans, other bits and pieces that are just throwing a couple of pebbles in the water, shall we say, for this strong US consumer. So need to keep an eye on that. But for the Fed themselves, they won't see much problems in those numbers there. Because of all that, Fed swaps are now pricing above 50% odds of another hike after July. So that's split between September and further out in terms of when the Fed might hike again, but we are now pricing in a second hike to come. Will that be confirmed, or will that be dismissed by the Fed tonight? These are the questions.
Are we really pricing a second hike? We're pricing a few basis points. Hold on, let me just check. So the peak, hold on. So August Fed funds 94.67, and we go down to 56. So 11 basis points. So yeah, so roughly 50%. Is that what you said?
Yeah, pricing in 50% odds.
Yeah. Sorry.
So
I misunderstood. My bad.
That's all right. No worries. You're sacked.
Yeah.
Let's get it up there. What are you looking at? You're looking at the August, weren't you?
Yeah. So basically, it's deliveries here. I'll be back in 2 minutes. Okay, I'll be back in 2 minutes. Sorry.
Getting delivered a new surfboard.
Yeah, I wonder what it is. Oh, we have to wait now.
I think you can take the screen back, eh?
Has he got? Yeah, has he got it? Has he?
Yeah,
I've got it.
Oh, is it you? All right.
There, that's me showing that. Yeah, where's the? I can't find the August. Where's the August thing? Well, it's September anyway. The next meeting, isn't it? So yeah. Anyway, that's where the RIS were pricing. Still can show it in a minute. I can't see what he's seeing, but there has been a tick up in, as I say, expectations for a second hike, whereas those have been coming down of late based on some of the data we got. He's thrown me all akimbo now. I don't know where I was. Right, earnings. Just been keeping half an eye on the earnings and big numbers last night. Google and Microsoft and Visa as well coming in with decent earnings numbers there. So again, no problems on the earnings front for the bulk of the big companies. Little bit different for some of the UK numbers. Lloyd's in particular looked a little bit wobbly this morning. No surprises there. One of the banks that had to be bailed out over the crisis, the GFC, eons ago, still a little bit in the hole there. But US earnings still coming in pretty strong. No fears there. Of course, we have to see whether Q3 matches up or whether it goes a bit weaker. That's all I've got on the headline front. Don't know if you've got anything, Kay.
No, mate. I mean, it's been very quiet, right?
Yeah.
It's more opinions than really fresh news coming out. Well, the only other one is that, as you say, the Chinese continue to waffle about do more capital market reforms. And noteworthy is that if you look at the dollar CNH, at least, we went below the CNY fix and we're back above. I think we just need to continue to watch that George of it's a real judge of sentiment to me. When you trade dollar CNH over or below the CNY fixing. So we're back above. So that to me signals that the investors are not yet buying.
I'm back. Sorry about that, guys.
Are not yet buying the reforms to come, or are still worry about more injections, more stimulus, which in theory is negative currency, right?
Yeah, exactly. And we've had another test down at that 712 area.
Yeah.
And that's held. Let's see what the bounce does from here. If we can't get back above this 716, 17 area, that might suggest that we're going to get a further move down.
Yeah.
This was a level that I was potentially looking at the first time around, but then we had a break. I didn't fancy catching it, and I didn't fancy catching it down here. Then we had the move up. Now we've had that move down, another break underneath it, potentially holding underneath it now. So that keeps the short-term bearish bias in play for this one. If, as I say, if we hold here for any length of time, we're probably going to break at this level, and we're going to see some further downside. So I'm still, my bias is still now short, looking at shorts for this one, but I want to be picky with my entries, I think.
Yeah, we're still really waiting for either more details of what the Chinese want to do, and what's going to happen with those three central banks. As I said, I mean, this week could be a pretty important week for the CNH, but not only due to the Chinese stuff, but also due to the major central bank decisions. So I guess come Friday or so, we will have a clearer look and outlook on what the CNH may do, because I think the next move is either like go and have the test of the big seven, or start to move above the prior highs, 721.22, and then I guess we're back off to the races, you know. So I think it's important enough to just watch the game. Preparing and looking at stuff for when the moves will happen, and reading up is also a strategy, you know.
Yeah, no, exactly.
By the way, chaps, sorry about before.
Yeah.
Just want to add something before we move on to whatever else we move on to about the Fed. So I'm going to put a link here on the chat. So this is Fed Fund futures. So this 100 minus the price of each one shows you roughly the rate of Fed funds prevailing for that month. The problem is you have intra-month meetings. So, you know, part of that month might be at the low rate, part might be at the high rate, etc. So, I mean, there's a way to actually calculate exactly what's implied. But if you look at the Fed Fund, the FOMC dates, we have this meeting today, and then we have none in August. So theoretically, the August Fed Fund futures shows you the average rate of Fed funds after today's move, which is a 25. So if you look at August Fed funds, which is showing, you know, if you click on that link, you'll see it's showing 94.68. And then you go down and you find the lowest price, which is 94.56 for November. So that's what the peak in rates is. And what's the difference between those two? 12 basis points. So that shows you roughly what's priced into the market, and when also, as I said before, because you don't have the meetings on the 1st of the month, you have them on the 10th, on the 5th, on the 20th, whatever, you know, it doesn't matter. You have to calculate, if you want to do it really, really well, you have to calculate X number of days with the old rate, you know, Y number of days, the new rate. I used to do that on my spreadsheets when I was market making, because I was market making these Fed fund rates. But you know, just a quick calculation shows you a rough indication of what's priced in, just for people to know.
Yeah, thanks, mate. I've got it on the screen there so people can see. And yeah, also the Fed watch tool you can use as well to get those rate probabilities. So you can see down there what they assign a percentage to what rates are going to be at that particular time. So the set meeting, that's what they're expecting. Rates 79% chance that they'll be at 5.25, 5.5, 21% chance of 5.50, 5.75. So that gives you, that's one. This is all free, so you can go and look at that yourselves. I'll put the link in there, so you can add that to your bookmarks and whatever. I'll put that in the chat. So yeah, that's your easy look at the probabilities for the Fed at least. Ali's got an interesting question. Question 1: if the Fed is hawkish and ECB is hawkish, who will win? Fed with strong economic data or ECB with weak economic data? And then the same thing on the other side if they're dovish. Well, you need question 3: what if one's hawkish and one's dovish? And that's the problem. And which one's hawkish and which one's dovish? That's the problem, Ali. There's so many different variables for these meetings. So what you have to do is you have to look at the fundamentals, look at the bigger picture, look at what's going on. At the moment, which economy is doing the best? Is it the US or is it the Eurozone, Europe? At the moment, you'd have to say that the US is doing better. So in terms of who's going to win, it's likely that the dollar's going to win, because irrespective of what the Fed says, unless they're hugely dovish or there's a huge change from them, they're likely to keep their message going, that they're going to hike, there may be another hike, they're going to keep rates higher. So it's going to fall down to the fundamentals as to when that view will change. And on balance, it's more likely that the ECB will turn dovish faster than the Fed, because that's what the data suggests at the moment. So in terms of who wins, it's not just about the announcement, it's what the announcement means and then what the fundamentals mean afterwards. So we'll obviously get an initial reaction over what Powell says, what the announcement says, what the statement says, or whatever. But after that, the market will say, right, well, now we know what the Fed are doing. What does that mean in terms of the economy? Does that match up with what we think the economy is going to do? Does it match up with what the economy is doing? Now, if Powell says he's expecting jobs to continue strongly, 500 NFPs for the next 6 months, retail sales at 2%, manufacturing will rocket back. We'll have PMIs at 60. The market might go, well, actually, you're overdoing it, Powell. We don't believe you, so we're not going to trade that way. So it's all about what comes out from the announcement and the market then matching that up with the fundamentals. That's what's going to bring the longer lasting moves in the dollar and the euro. So it's you can't really pick a scenario now and say, I'm going to trade that, because there's more than one. There's many scenarios. They could be really hawkish. They could say, right, we're going to hike this month. We're definitely going to hike next month, but then we're going to cut rates in December. And all of a sudden, you've washed out that hawkishness at the start with something dovish at the end, and the market will do a complete 180. So you have to take everything as it comes, get to the end of the presser, then we know where we're at, and then we can work out what the price is going to do from thereafter. So what are your thoughts, guys? I mean, we've knocked it around a bit. Opinions, what they're likely to do, so on and so forth. How are you going to set yourself up for trading it? Is there any pairs, assets in particular you're going to be looking at?
Well, before the FOMC, you mean?
Yeah, or after, over, whichever way.
Well, before, my positions are very light. I still have my silver long, because I do think that the more than 50% chances that they are a little bit more dovish than expected. I have taken a third off. It's gone very well over the past weeks, 6.5% or something like that. I'm still keeping the other 2/3 because I always want to have some position. But positioning in the dollar, market's quite short apparently. So I fear that if they're not dovish, that there will be a little bit of a squeeze in the dollar, and that means bad news for metals, etc. So, but I think that will be short-lived. I think that the main picture in the overall global environment in terms of rates and inflation, price pressures, I think it's dropping. And we saw that with the Australian numbers overnight. We've seen this pretty much everywhere. Even the UK is dropping more than expected. So my view is that we have another hike and then we are done for the Fed. For the UK, the ECB might have another more, but I think if the Fed pauses, we can bet that the others are going to pause as well. So going ahead of the FOMC, I don't have really big positions, but I do think that the base scenario, for me at least, is that they are a little bit on the dovish side, and that could easily spook markets and send the dollar and yields lower. lower still. Now, in terms of reacting to what happens, if they are dovish indeed, I'm going to be I'm going to be looking to add to buy back that third that I sold in silver. I might have to buy back higher. I don't know, but that definitely. And I will also be looking to short some dollars. My favorite ones are always against Norway, against the pound as well, because of central bank divergence that I've talked about for weeks now. But on the other hand, if the Fed is hawkish in any way, then I will definitely let go of the rest of my silver, because I think we will be going lower in the short term. And currency-wise, that's a tough one. Which one would I want to be long? I don't know. I have to think about that. Yeah, I don't know. I don't know, actually.
Well, you haven't got long, mate. It's happening this evening,
no.
so you need to...
Yeah.
But that's a difficulty, because you can't take a position really in euro dollar when you've got the risk of the ECB tomorrow. Or you can, but you've got to know that you've got another risk event tomorrow with the ECB. So you can trade it one way on the Fed, but you're going to need to lock in your profits if you get them, and protect yourself in case the ECB throws it the other way. So it's very difficult, as I say, to get in these events. I've got my thoughts, which I put into a blog yesterday. I'll pop the link in the chat for you there, so you can have a read of that. So just covering the three central banks. But Kay, what are you eyeing anything in particular as your weapon of choice for the Fed?
For the Fed, it's a difficult one, really. I really think it's a difficult one. There's one I do agree upon with Dale, is that any weakness shown by the Fed is likely going to send, it's going to send the dollar lower, yes. But one of the favorites may be the cable again in that one. We've seen the data, they're mixed, but not really falling out of bed. And well, I like to use this word. I mean, the sterling still seems a little bit more elastic than the euro, for instance. So I know it's an accelerator sometimes when you, especially when the dollar goes down, cable tends to go faster up than euro dollar, and vice versa. But and we're actually seeing it today again for various reasons. I do think that there's already a bit of end of month fixings going on in the European morning again. If you look at how sterling behaves, for instance, but I'm not sure the Fed will be dovish, and that's. I think the Fed may be a more difficult trade than the ECB, but then I'm got a bigger opinion on the ECB than on the Fed as well, because I think it's probably the last hawkish meeting of the ECB. So I'd rather go and look for some decent euros to sell, perhaps not versus the dollar, but versus crosser if we get a hawkish ECB and then a pressure where Lagarde can destroy it. But yeah, the Fed for me is a more difficult one to play. If it's dovish, I also think dollar yen will get a knock on the head, just because we have Bank of Japan to come and with the risk that they're still very alive that they will do something at least, or talk about something. I don't think, by the way, for the Bank of Japan, if they hike the inflation expectations, but not do anything or not signal anything, I think the drop in dollar yen is going to be a buy on the other side, but or the rally in yen, perhaps a sell versus something else. But yeah, again, I mean, for me the FOMC is less clear, a less clear cut one. There's a lot of reactionary trades, but and as Brand said, where for this one you may just be a sniper and trade for 30-40 points and then get out of there and wait for the ECB tomorrow.
Yeah, no, I see that as well. I mean, probably the only real trade I'm looking at, because I'm long dollar yen still, and so I've got that to manage. I'll decide whether I want to chop it out into the FOMC or whether I want to let it ride. Because if I get a hawkish move up in dollar yen, I think I'm going to sell it out and then potentially get short for the Bank of Japan, because I still think there's no way we can come out of that on the same level as we are going into it, in terms of hawkish dovish. You know, just moving the forecast up above target will be a change of assumption. I think that would be enough just to keep the balance tilting dollar yen to the downside. So I'll be looking to get short. Whether I chase a short lower on a dovish Fed is another question. So I'll have to look at that, see what levels we're at. You know, if we're down at 138, do I want to risk trading that close to a potentially big level into the BOJ? I may still do it because my thought will be the same, but don't know. It's one of these things you just have to play it by ear. If it ticks the boxes, you trade. If it doesn't tick the boxes, you don't trade. But that's potentially what I'm looking at. The ECB can go and do what it wants to do. As far as I'm concerned, I'll watch Euro Sterling, make a trade on that perhaps if I get some of my decent levels that I'm looking at. But that's the main exercise I do around these events. I just pick my levels either side of it. I look at a range. I look at, you know, the market's going to move. If there's big news, it has to break levels. If it doesn't break levels, the price is going to go the other way from that level, whether it's 10 pips, 50 pips, or 100 pips, or 2 pips, doesn't matter. So my exercise will be looking at the levels, 139, 138, as Kay said, you know, down into 137s. Top side, we know the level on the top side, 145. So if we get news and it tests those levels, that's where I'll be watching. If it doesn't break, if it breaks 139 but doesn't break 138, and we stay there a while, then that says the market's, you know, it's done its pricing. It gives you a now greater probability of trying to nick a trade and nick a profit. Doesn't mean it can't bounce close to the line and then break it after, of course, but if a price can't get through a level, then that gives you potentially something to trade. And it will just be a case of, right, if it's big news, can we break these levels? If we can't break those levels, I'll assess the news. Is it game-changing news, or is it just a reactionary news, you know, something small? And then you can plan your trades from thereafter, look at what everyone else is doing. And that's what the market's going to do.
And I think, Ryan, if you look at the inside range, it's around 139, 142. Okay. But I really would expect, we can expect one of those two boundaries at least, maybe even both, being tested after the combination of Fed, ECB, Bank of Japan. I think that's your inside. Well, inside is still 300 points, but that's a valid inside range, I think, to monitor for starters. So I agree with you. If you get a blip up to 142 with your strategy, to at least lighten up what you still have, and then see where it goes from there into the Bank of Japan. But yeah, I think it's 139, 142, and then 137, 145 really.
Yeah, exactly. And that's what traders should do just in this thing. And all big events like this, pick, you know, you can have 100 levels, you know, the moving averages in there, some little levels in here, trend lines, everything. But you go through and you rate your levels and you say, right, which levels am I going to be, I'm going to trust the most? As Kay says, you know, 139, 142, you know, that's where we found resistance. That was the break point where we found support. So that's your smaller range. Then you come out a bit wider, 138 next. Maybe you could look at, you know, up into the 144s as another more minor level, but a bit bigger perhaps than 142. It's certainly far enough away. It might be a stretch point. And then your big ones at 145. Same down here, under 138. Under 139, you got 138, 137. So all these little levels in the middle, I'm not going to give two monkeys about. Moving averages, everything that's in probably a 50, 60 pip, 100 pip price range, I'm just going to ignore, because the volatility is going to be too much for it. Look at your wider levels. And that's where you just try and give yourself a better chance of grabbing a trade that might work. Kay, did you want to have a look at a few pairs before we close up for the day?
Sure, yeah. Okay, let's look at euro dollar, but euro dollar is perhaps not the best pair to really trade after the FOMC, because we still have the ECB to come. But still, there's levels to look at. So I'm just going from a little bit of a wider picture. As you can see here, where euro dollar stopped is the 61.8 of the pandemic decline, while I was absent. So last week it stopped over there. It actually tagged it pretty nicely, and also there was a bit of this channel where the bottom trend line came in around there as well. So creating a possible target. This is going forward. This is going to be the major level. And if I were you, and like I did, I made a note of this level on a piece of paper, and saying that this is mega important around there, because if it goes, then you're looking really at higher levels. But we will have to see if the combination of Fed and ECB has enough power to make it break. I'm a little in doubt. The options market wasn't really relaxed about both meetings up to yesterday. Yesterday, the vols also all of a sudden have started to shoot higher, which is logic. People are trying to either put on more protection against their positions, or speculators trying to get an option on board just in case things start to move, right? On the and then on the way back down, and I'm going to have to go to the 4 hours for that. We stopped around I say it's around there. We stopped around a couple of levels that we have here. We just went below a little bit, this 110 and a quarter, 110.30. This is your first point of measurement tonight, I would say. Prior top around here as well, around 110.10. So this is your first level, and then keep an eye on what's going to happen at 109.5. But again, I mean, I don't know if euro dollar will have the power to break any strong levels before we know about the ECB. But if it goes down to 109.5 in euro dollar, around there, 40.50, keep that level in mind as well. This is going to be a bit of a make or break zone, in my opinion, past ECB, before we then talk about the bigger zone around another big zone around 108. Top side today, I'd say 111.5. 111.5, first point of port of call, and then 111.90. If we see those levels, then pay a little bit attention to what's going to be the reaction out there. It's also where we stalled a little bit after having done the first corrective move in the euro dollar. So that is where the first little zone of interest will lie in the euro dollar to me. Cable, as I said, cable, yeah, cable is still a good one. Look, I mean, I've traded this one yesterday, this trend line, and it was pretty cool. Well, I'm out of it because I don't know what's going to happen on the Fed or later the ECB, and the Bank of England is only next week, so we'll have time to look at that. But level here, the trend line is going up, but it's still 128, the figure, give and take 5-10 points either side. Yesterday we had in the afternoon a retest, and then into the fixing hour for some reason that people in our flow room will have seen. We had quite a big rally. We had some continuation today. I do think we are already seeing the early end of month flows. Remember last month we had a very big last week during the European mornings. There were a lot of flows going on, but we have to know that it was quarter end, half year end, in addition to the month end. So that likely will have increased volumes quite a bit. I'm not sure that we will have similar kind of volumes this week, but being ahead of those big central bank meetings, the liquidity may be a little less, so we may have a few flows. And if you look at what the hourly flows were this morning in the cable, you will understand what I mean. It's no big moves, but the sterling did rally a bit this morning. So again, over to the FOMC. Keep an eye on what's going to happen if we retest what is 28, the figure to 28.20 also, this 2025. This is going to be your first support zone. If that breaks, then there's probably going to be at least another 50 to 75 pips in there if it breaks. If in turn we're getting a bit of a test and a hold again, then I wouldn't rule out for the sterling to be on its way back to 130. That would be a nice level to at least reassess what's going on. It's a bit of a fib level, and it's a trend line level. So around 130 figure 10 is going to be your level that you want to monitor. Dollar yen is a difficult one to me, at least. Yeah, we're holding this trend line, but really, as we were talking about, it's 139, 142. Okay, this trend line is going higher again now, but it is 61.8 there. So that's your inside range. It's 300 points, but the yen is volatile enough to do 150 points down or up. We have seen that. Look at those moves. Those moves are pretty violent. You're talking about emerging market style moves. Yeah, 1% a day is not too much in yen, and it's reflected in the volatility, the options volatility levels as well. And then, of course, is going to be the big 145, and I think here around this 137.5, 137.25 is going to be your big level post Bank of Japan. You've seen this level as well here. Others, Aussie, so Canada, I haven't got a clue. Really, I have no clue on the CAD. It should be happening again. 133, 133.40. Should be your major resistance zone. Dollar CAD is moving up a little bit. Oils are coming back down a little bit. So it's all, yeah, it's call it logic, call it follower of fashion. I'd say there is a bit of a, seems like to be a bit of a triangle here. Probably bit of a danger zone around 132.30 for the immediate, and on the downside your first level should be around here, 131.5. Those are probably your closest levels to watch, but I'd say 133 figure 40, and on the downside, that those levels that held here, I had multiple lines there, trend lines coming in. That is going to be your big zone now, anywhere between 130.80 and 131, the figure. That's going to be the biggest zone in the dollar CAD right now. The one that I'm keeping a very close eye on is oils, energy, and what's going to happen to the euro CAD after the ECB. We are on the approach again of the 146.40.50. You were asking about magnets, Brand. Well, look at how big a magnet that is, and we can go back years and years and years and years. It's an obliged station for the euro CAD, right? So, and that's going to be my level of interest post ECB. Close above, close below, I think is going to be good enough to see the next leg. Which could be a big figure leg, depending on what's happening in the oil market. As I said, I expect ECB perhaps doing a bit of a hawkish one in the statement, but we have already seen not talking about the euro dollar when it was trading in the 112s, that it could be counterproductive for exports, but on the other hand, the stronger euro is good to fight inflation. So this one is going to be very, very interesting tomorrow. And before I move on, there's another euro cross I want to talk about, and that's euro yen. We have several trend line F.A.C.E levels here as well. 155. You saw the acceleration. Okay, it's been trading around, but I still think it's acting similarly to that 146.5 in the euro cap. 155 euro yen. That's going to be a big one post ECB and Bank of Japan. I think hold or break is really going to possibly create a multi-percent or multi-big figure move. Yeah, and then we've been talking about those carry trades. Everybody is warning against a possible exit of carry trades. So if you look at dollar MEX, for instance, which is, as we all know, the biggest carry trade out there because it's an 11% currency. It is the US manufacturer. It is whatever you like. Investors like to be in the MEX. So there's still probably a lot of positions in there. But keep a very close eye. I've been saying that in our chat room as well. 1705, 1708. Let's put it there with a confirmation probably above 712. If that starts to break, then I think there's really room to get back up here into the 1740s, and it can go very fast. We have seen those kind of rebalancing stuff that we've seen in the past, where people were rebalancing between MEX and Rand, for instance, between two emerging market currencies, how fast both currencies can go. So keep a very close eye on 1705.08. For as long as we're below, anyway, the long term, the very long term downtrend is still intact. We have to go back to 18s to break that. But for the shorter term or the medium term, I think it's important enough to keep an eye on this one. And have the same with the ECB coming up. Look at this, we had rejections close to 19, and your trend line comes in at around 1910, 1912. If that starts to break over the ECB, then be careful, because then there could be people needing to run for the exit on the carry trades. It's not because you get 7 or 8% differentials that you're going to stay blindly in a trade, because you can lose 2 or 3% in one session. So be a bit careful. I think there's a bit of preemptive rebalancing going on. We've seen yesterday early morning a low print on the Euro MEX, a low print on the MEX yen, and both have been already correcting a bit. But if you get hawkish central banks here, there is a risk that we could correct further. If both stays dovish, then I guess the investors will continue to pile into them, and then we can see probably fresh lows in Euro MEX and why not fresh highs, or at least intermediate highs in the MEX yen. The NOK, we've tried below that 713 level on the Euro NOK. I think that's decision time tomorrow, right? I'm not going to take any positions here. Your big levels are 1135, 37 here. If that breaks again, then the party for the NOK is over. But with my feeling on the ECB, if we get up there, and with the European data, if we get up there on a spike, I may be looking to try to give it a try up there. If we start to break below 1105 or 6, then it's probably going to test lower on the Euro NOK. What else? Is there anything else you guys want to look at while I'm on it? Euro sterling, yeah, okay, Brad. So here we are still like I think flagging on the dollar NOK, and that's going to be important for tonight on the Fed. It has to break back below 994, 995 to get going, and then these head and shoulders could play out in full down to 960s. If in turn we start to break above 10, 16, 17, get a confirmation through 1020, then we're probably going to go for a retest of the neckline around 1050. So those are the levels in dollar NOK, and then quick look at the euro sterling. But I think, Ryan, did you not have a look at the euro sterling already?
Not this morning, mate.
Okay.
But, we've looked at it often, obviously.
Okay. For me, there's a couple of levels here. Intermediate is 86.15 around here. If you look at it, it's bit of a station, a tube station there, where euro sterling tries to make up its mind, and we are trading below, but it's going to take a very dovish ECB to go down there. But it's possible on the combination of both, even if they are a week apart. Euro sterling, it is possible that we are going down there. But if the Bank of England would spring a surprise and hike more, I'm not sure if inflation alone is enough to drag it lower than there. So yes, I can see a move down there, because I think the sterling is still doing a little better than the euro as a currency. But is it going to break below 85? That's going to be a bit of a big ask, and would be a big event. Top side, as I said, 1815, 25, and then back into this zone here around 86, 50, 60. That's I reckon a bit of an area here, and really stretch it up to 87. The figure, this 40, 50 points here is going to be decision time for euro sterling if we get back up here. I think if we start to break above 87, then there's a lot of clean air above there to move higher again. But we have to break first. Okay, so these are your levels on the euro sterling. That is it for me. Back over to you.
Thank you, mate. Kevin, I think we maybe someone look at dollar CAD when we get back in the chat room. Certainly, I don't have a lot on that one myself. Though, just have a quick look. We're on a bit of a level, 68.40s.
Sterling CAD.
Pound CAD. Yeah, 71.40s, 60s. Yeah, I can see that. I've got a little chart. I won't show it, but I'm lining up with your lines, mate. It seems, but we'll have a look at that one in the chat room. Right, thank you very much, Dale. Any last minute thoughts before we shut up shop?
No, just don't take too much risk going into a big event like today. That's always my advice.
Oh, I forgot.
Unless you're Jay Powell and you know what's happening, what's going to come.
So okay.
I said I forgot to look at the metals, but the levels are pretty. But I mean, just this one on silver, because both Stel and I are in there. Look, have a look at this level here, 24.25. We start to get back below, then there's probably something going on the dollar, and we could see that another dip down to 23, high 22s perhaps. And but if in turn the Fed is dovish and you break above 25, confirm above 25.25, then we're probably going to rally. That's the short version. Okay, that's me done.
Thanks, mate. Yep. Have a good one, folks. Stay safe. Don't guess. If you're not sure, just sit on your hands, wait for the dust to settle, and then try and pick up some trades afterwards. And tomorrow we shall see what happened and get ready for the ECB and have a moan up probably about what we missed. Have a great day. Thanks for coming to the Flow Show. Thanks, Kay. Thanks, Dale. See you all tomorrow.
Cheers all.